When you've just stacked a row of wins, the charts start to look different. Every candle feels like it's moving for you. You breathe confidence, maybe even invincibility. The voice in your head whispers, you've cracked it. You finally see the market's rhythm. But beneath that rush hides danger. The same energy that pushed you to victory is now pushing you toward risk. The line between skill and luck blurs, and your mind starts trading ego instead of price action. The market doesn't reward pride, it punishes it, and the fall always comes faster than the rise. Evan Lee still remembered the morning his account first hit six figures. The notification popped up on his phone, bright and unreal, like a dream finally touching daylight. He sat there for a moment, frozen between disbelief and pride, watching the number sit on the screen as if it might vanish if he blinked. For years, he'd chased that milestone, the late nights, the endless charts, the self-doubt that had eaten at him during every losing streak. And now, suddenly, he was the guy who'd made it. He brewed his coffee slower that morning, scrolling through his trades. Every move he'd made looked flawless in hindsight, like the market had been dancing to his rhythm all along. His reflection in the monitor showed a smirk he didn't recognize. The more he looked, the more he convinced himself that this wasn't luck, it was mastery. The problem with winning streaks, though, is that they whisper lies dressed as wisdom. By the end of the week, Evan's trading journal was filled with words like momentum, intuition, and flow. He started skipping setups that didn't feel right, trusting gut instinct more than analysis. He doubled his position sizes, justifying it as scaling up. When a trade went his way, he felt like a genius. When it didn't, he shrugged it off. The next one would cover it. That was the illusion of control tightening its grip. Outside of trading, the confidence spilled over. He started giving advice in online forums, typing paragraphs about discipline and edge, as if he were some kind of market philosopher. People listened. They called him sharp, next level, and every compliment added another layer to his armor of certainty. What he didn't see was how fragile that armor really was. One Friday afternoon, he stared at a Euro USD setup forming exactly the way he wanted. His heart thumped with that familiar thrill, that blend of confidence and adrenaline he now craved. He entered the trade with triple his normal size. The first candle went green, and his grin widened. Then another candle, red this time, longer than it should have been. He hesitated, but his mind told him to trust the process. Within minutes, his screen turned into a sea of red. He refused to close the position. "It'll bounce," he whispered. It didn't. Hours later, Evan sat there, silent. The room that had felt like a command center now felt like a tomb. The charts still moved, but they mocked him now. The confidence, the thrill, the sense of invincibility, gone. In their place was something colder, realization. He had become his own worst enemy, not because he lacked skill, but because he forgot humility. That night, Evan couldn't sleep. Every sound in his apartment, the hum of the fridge, the ticking clock, felt amplified. He replayed every trade, every proud thought, every moment where he ignored risk because he knew better. He thought about how, just a week ago, he was unstoppable. Now he couldn't even look at his P&L. The winning streak had built a story in his head, one where he was the hero. But the market doesn't write stories, it erases them when you stop respecting it. He poured himself another cup of coffee and stared at his reflection again. This time the smirk was gone. What stared back wasn't failure. It was a lesson, paid for in humility. Evan didn't realize it, but his brain had been rewired long before that final losing trade. Every win had been a chemical hit, dopamine flooding his system, convincing him that each correct call meant he was becoming smarter, more in control. It's the same neurochemical loop that makes gamblers keep pressing the button even when the odds turn against them. Success had become his addiction, and like any addiction, it blinded him to risk. In trading, overconfidence is a silent poison. It doesn't arrive as arrogance overnight. It seeps in slowly, disguised as progress. After a string of wins, the human mind starts building patterns that may not exist. It assigns meaning to randomness. Evan's brain wasn't analyzing charts anymore. It was seeking validation. Each green candle wasn't a data point. It was a mirror reflecting his growing ego. Psychologists call it the illusion of control, the false belief that one's skill can influence outcomes that are largely random. It's the same bias that makes people think they can roll dice better or predict coin flips. For traders, it's lethal. The market tempts you to believe you've mastered it, and once that belief takes hold, humility dies. The trader stops testing ideas and starts defending identity. Evan's confidence was no longer rational. His prefrontal cortex, the logical part of the brain responsible for planning and restraint, had taken a back seat to the emotional circuitry of reward and anticipation. That's why he felt unstoppable. The market wasn't just offering profit anymore. It was feeding a deep psychological need to prove himself right. Each trade became a statement. I know what I'm doing. I deserve this. And yet, beneath every overconfident trader lies fear. Fear of losing, fear of being wrong, fear that the winning streak was just luck. The brain hides that fear behind certainty. The louder the ego gets, the more it tries to silence doubt. That's why traders over-leverage. That's why they hold losers longer than they should. The mind would rather destroy an account than admit it doesn't know. Cognitive biases stacked up like dominoes inside Evan's head. Recency bias made him believe the future would behave like the past. Since he'd won recently, he'd keep winning. Confirmation bias filtered out information that didn't fit his bullish beliefs. Outcome bias made him judge his decisions by results instead of process. Each bias pushed him further from objectivity, further into self-deception. If you looked at Evan during that week, you'd think he was thriving, focused, driven, confident, but his psychology was cracking. His brain's reward system was hijacked, his perception distorted. That's why the fall felt so sudden when it came. It wasn't the market's shift that broke him, it was the collapse of a fragile internal illusion. When traders like Evan experience overconfidence, they're not just fighting the market, they're fighting biology. The human brain evolved to reward confidence because it helped our ancestors take risks and survive. But in trading, where uncertainty rules, that same mechanism becomes toxic. The brain keeps shouting, "You're right," even as the numbers bleed red. The tragedy of overconfidence isn't that it makes traders lose money, it's that it replaces curiosity with certainty. Once you stop questioning, you stop learning. Once you stop respecting risk, you stop surviving. Evan's downfall wasn't caused by bad analysis, it was caused by a good streak that tricked his mind into thinking he was invincible. That's the paradox of trading psychology. The better you do, the more dangerous you become, unless you understand how your mind turns victory into vulnerability. Evan wasn't the only one to fall into the overconfidence trap. Across trading communities, stories like his echoed quietly. Different names, same mistakes. But there was one story that stayed with him, the one that made him truly understand how dangerous winning streaks could be. It belonged to an old acquaintance from an online trading forum, a guy named Marcus Hill. Marcus had been a quiet presence in the chat rooms, methodical, disciplined, always cautious. He wasn't flashy, but everyone respected him because he didn't chase hype. His setups were clean, his risk management precise. For 2 years, Marcus had been grinding, building his small account slowly. Then came the crypto bull run, that period when every chart seemed to go vertical. At first, Marcus traded it smart. Small positions, tight stops, taking profits regularly. His account doubled, then tripled. The chat room buzzed with envy. He became the guy who could do no wrong. He started streaming his trades, and people tuned in just to watch him click. His calm demeanor and confident tone made him sound like a teacher. But behind the camera, something was shifting. The more he won, the more he felt invincible. He started using leverage, 2x, then 5x, then 10x. When viewers warned him, he laughed it off. "I've done the homework," he'd say. "I know my edge." The phrase became his mantra. He stopped journaling, stopped waiting for high probability setups. Every small dip looked like an opportunity. The line between strategy and impulse blurred until it vanished. One night, the market turned. Bitcoin dropped 8% in an hour. Marcus was live, smiling, still holding. The chat exploded. "Take profit, close it." But he stayed calm, sipping coffee, saying, "Relax, it's just a correction." Minutes later, his unrealized profit vanished. Then came the margin call notification, the one no trader ever forgets. His smile froze. The chat went silent. By morning, the video was deleted, the account gone. Marcus disappeared from every group. No goodbye, no lesson post, nothing. Just silence. Months later, Evan stumbled upon him again. Not in a trading chat, but in a psychology forum. Marcus had written a long post titled "The God Complex of a Trader." In it, he described the spiral with brutal honesty. Open quote, it wasn't greed, it was faith. Faith in myself, faith that I couldn't be wrong. The market didn't humble me. It just reminded me that I was never in control to begin with. Close quote. Evan read that post twice. It was like reading his own diary, written by someone else. He realized that overconfidence doesn't just destroy accounts, it destroys identity. Traders don't lose money first, they lose objectivity. Once ego takes over, every trade becomes personal. Every loss feels like an insult. Marcus's story became Evan's mirror. He saw how easily skill turns into pride, how subtle the shift is between I'm good at this and I can't lose. The market doesn't punish arrogance immediately. It waits patiently until the trader stops respecting it. Then it takes everything at once. After that, Evan went back through his journal. For the first time, he noticed the pattern. Every losing streak he'd ever had came right after a winning streak. Each time he grew too confident, he loosened discipline. The data was clear. The problem wasn't strategy, it was emotion masquerading as certainty. He began to understand why traders talk about humility as a weapon. It's not about self-doubt, it's about balance. Confidence fuels growth, but humility keeps you alive. He thought about Marcus, about the silence that followed his fall, and he promised himself one thing: never let the market remind me who's in control again. That realization didn't make trading easier, but it made it clearer. Every time Evan looked at a chart now, he didn't just see price movement, he saw his own mind reflected back at him. Evan's recovery didn't begin with a strategy, it began with silence. After the crash, he stopped trading for a full month. No charts, no forums, no Discord calls. He needed distance from the noise. For the first time in years, he let himself feel the loss. Not the financial one, but the emotional one. The loss of control, of identity, of trust in himself. Most traders rush back after a drawdown, desperate to win it back. Evan didn't. He journaled instead. His first entry was raw. I wasn't trading the market, I was trading my reflection. That sentence became his anchor. In the following weeks, he started rebuilding, not his account, but his mindset. He studied the psychology of decision-making, read books on behavioral finance, and listened to interviews with traders who'd survived decades in the markets. He noticed they all said the same thing in different words. Success in trading is 80% emotional regulation, 20% technical skill. Evan began to design rules, not for profit, but for protection. Rule number 1, never change size after a win. Rule number 2, take 1 full day off after 5 consecutive profitable trades. Rule number 3, before every trade, write down what emotion I feel: greed, fear, confidence, boredom, and decide whether that emotion helps or hurts my judgment. It felt tedious at first, robotic even, but slowly the structure became freedom. The discipline stopped being a cage and started being a compass. The urge to prove something faded. What replaced it was curiosity, the kind of mindset that asks, what's the market trying to tell me? Instead of, how can I be right again? He also learned the power of ritual. Each morning, before turning on his screens, Evan meditated for 10 minutes. It wasn't about spirituality, it was about grounding. He visualized himself as an observer, not a predictor. He realized that control in trading doesn't come from knowing, it comes from accepting uncertainty. One of his mentors, an old trader named Luis Moreno, told him during a phone call, "Ego is the most expensive position you'll ever hold." That line hit harder than any loss. Evan wrote it in bold letters above his desk. Every time he felt confidence creeping in, he'd glance at it and smile, not in shame, but in respect for the lesson. Evan also started journaling wins differently. Instead of writing plus 2%, he'd write slahs, stayed patient, followed plan, no emotion. The measure of success shifted from money to mindset. That change transformed everything. When he finally returned to live trading, it wasn't about proving his skill, it was about proving his discipline. There were still losing days, of course, but this time he didn't spiral. He logged them, reviewed them, and moved on. The emotional roller coaster had flattened into a calm rhythm. He had learned that mastery in trading isn't about eliminating mistakes. It's about managing your reaction to them. Overconfidence never vanished completely. It just became recognizable. He could see it now, like a wave forming on the horizon. When he felt that surge, the belief that he knew what would happen next, he'd laugh, close his laptop, and take a walk. That simple act saved him more times than any indicator ever could. Evan realized something profound. The goal of trading psychology isn't to control the market, it's to control the self that faces it. Confidence without awareness is arrogance. Awareness without confidence is paralysis. The real balance lies somewhere in between. And maybe that's what growth looks like. Not in bigger profits or bolder predictions, but in quieter mornings, steadier hands, and the humility to admit that you'll never fully conquer the market, but you can learn to coexist with it. If you've ever felt that rush after a winning streak, that electric feeling that you can't lose, remember this. It's not confidence that destroys traders, it's blindness. The market rewards awareness, not arrogance. Every time you sit down to trade, you're not just facing charts, you're facing yourself. Take a step back, breathe, ask, what state of mind am I trading in today? Because that single moment of honesty can save you months of pain. If this story resonates with you, share it. Drop a comment below and tell me your biggest lesson from a time you got overconfident. Let's turn mistakes into mastery together.